Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 9th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily chart of the ES. The previous session, what we were looking for was for any push into 2280 to 2281 to be defended by bulls for a shot at pushing into 2300. And what we saw was price come right into 2281, right in the middle of that zone, get bid right back up. And so far, price has pushed into 22.96 quarter so far this morning. So getting closer and closer to that 2300, 2280, 2282 continues to hold. Now, if there's any failure to push beyond 2300, we could be looking at a push back across the range and into the opposite side of the key range that's playing out here. So right now, from 2260 to 2280 up to 2300, that's the range at the moment. Price is currently staying in the upper distribution of that portion of the range as long as bulls continue to defend 2280s to 82. We could be looking at further strength into 2300. Now, any acceptance beyond 2300 has an upside target at 2314 to target to heading into the next weeks of trading. So let's take a look here at the intraday time frame. On an intraday basis, again, you can see price rallied off that 2280 zone. We had 2280 to 82 as the zone to watch in the trading room here and pre-market report yesterday. There's 2281, slow crawl right back to highs, and then it kind of just held the rest of the day. Here in overnight trading, we had a big push up, 2296, and we're now retesting VWAP from above. So given the current strength, given the push through 2291.75, which is the previous week's closing price, that's an area where bulls want to keep bid for a retest of highs and perhaps a push into 2300. Any failure to hold 2291s opens up a rotation to previous lows. The overnight lows will likely be defended for another rotation back up. At the moment, 2286 to 2287s, that's a zone right there where bulls want to keep bid should prices fail to hold 2291. So at the moment, we continue to trend up. Pullbacks are still buying opportunities. Next two spots right here, 91.75 and as low as 80 are the next zones to defend for a continuation to highs. All right, let's take a look at crude oil. Here's a look at crude oil. When you're looking at this thing in the higher time frame here, you'll notice how price pushed down below 51.67. And yesterday pre-market, what we started to see was an absorption signature develop. We mentioned 51.50 as the area where bulls want to defend, and if they could keep that area bid and push prices through 52s, the expectation would be a push back toward 53s. And there it is. We got a nice completion of that move. Not even a tick against us, as the final lowest low that was reached during the day was 51.50 on the button, and now we've reached 53. So a $1.50 move after that impulse move down. Very nice recovery back up. So on a swing basis, obviously we know we haven't really gotten much outside of this 51 to 54 range, and every time we get to an edge, it's a quick push back to value, and then from there, it's a lot of chop around 53s. So now that we are sitting at 53s, we could get a little bit of a push up toward 53.50, and then we could see this thing begin to chop above and below that 53, which is MCV puck, but a very nice recovery back up. If we look at that on an intraday basis here, very solid signature that we were looking for. Here it is when price gets down to that low. You can see price push right back up, rallied. Here's that 51.50. Every rotation was defended into that zone. Every rotation into 52s was being defended on the top end. And eventually price broke through the top side and rallied onward. So a very nice continuation off the absorption signature. Gave us a great zone to watch, and here we are reaching 53s just a day later. So very nice continuation into that zone. Short term, 52.60 is a zone to watch here for a continuation higher. Failure to hold that area will rotate back to 52.20, and that's another area where bulls will want to defend for a continuation up. On the top end here, we could be looking at a move into 53.50, the next key level above. All right, let's take a look at ZB. Here's a look at ZB on a higher time frame basis. ZB continues to push up. This is something we talked about in our monthly outlook to begin February was that bulls were looking to defend right in this area and were defending 149.24s. Bears were up here defending the top end of the range at 151.11. The expectation was that these bulls may eventually win out and push through 151.11 in order to reach the next key level above, which is 153.21. We got there yesterday. Very solid move up. Right now, bulls are currently keeping 2-day highs ago bid, so the high from 2 days ago, right here bid for a continuation up. At the moment, I mentioned that the next key level above may be 154.07 in terms of a level where rejection may occur. Here's the previous month's high as well. So we could have a little bit more upside here over the next couple of days. And once we reach this zone, that might be an opportunity to fade it back toward 151.11. So at the moment, we have finally reached the upper end of the range. We continue to trade within this range. We have to see up here, is the market going to reject these highs and push price back to 151.11, or will we begin to see price push through 154.07 and begin to work our way back toward 160? At the moment, the implication may be that we at least see some sort of short-term rejection for a pullback, and then from there we may see another attempt to continue higher. But right now, still pushing up toward those upper end targets. Looking at the intraday time frame, the previous session was quite a trend day. Very, very solid trend day. At that time, we were looking to defend LVNs on the way up. Once it reached the target up here, we got more of a pullback, and now we have a range here that's built out. There's a nice LVN right here, 152.18s. It's also the high from a couple days ago. LVN there, that's major support right now. So 152.15 to 152.18 is a zone to defend for a return back up. Failure to hold that level could auction prices back toward 151.11 and 5-day VPOC. Lastly, let's take a look at the NQ. Here's the NQ in the pre-market report, the prior session. What we were looking for was for bulls to defend the 51.65 key level. 51.65. We had seen a nice push through that level the day before, and what I mentioned before was any pullback into it could offer an opportunity to defend and squeeze to 5,200 and perhaps beyond, and we've seen that play out very nicely. This one, as I mentioned before, has had a strong uptrend. 1-day pullbacks, 2-day pullbacks max, and that's about it, and then we're seeing more strength ahead. So this has continued to push higher. We've just now reached 5,200. The next key level above is our 25% monthly expansion target. That's going to be 52.42. So 52.42 is the next major level above, as long as price continues to hold above 51.65. Looking at the intraday time frame, you'll see how precise that 51.65 bounce was yesterday. We had a nice drop right into it. Here's 51.65. Price dropped into it, got about 6 ticks below it, and then turned around and rallied, eventually reaching 5,200. So a very solid rally from 51.65 back to 5,200. And again, pullbacks likely to be defended as long as 51.65 remains intact. The uptrend remains in full force. So we could be looking at a continuation toward 52.20 and 52.42 over the next several days and perhaps into next week. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.